investing my money with somebody, I really want to vet them out and make sure that they are who they say they are, and they have the experience that they are portraying, because there's some bad actors in.
The Abundant Wallet.
Like I said, I love helping real estate investors like you just make sure everything they build is actually working together to create the kind of freedom that they want. So I guess, as far as like building a solid financial future, like what's the most important thing for you as an investor?
As an investor, I think it depends on the season of the investing, because I started investing in 2010 when I was 30 years old. So it was a little bit different now that I'm 46. I look for a little bit more security and cash flow. Trying to build up that monthly cash flow. Whereas in my 30s, and this is only information you can kind of get looking backwards, but I thought it was invincible. And luckily, I didn't have too many mistakes in my 30s. That kind of happened in my 40s a little bit with some deals in multifamily that didn't go as smoothly as I'd hoped. But yeah, to answer your question, I really look for security. And if I'm investing my money with somebody, I really want to vet them out and make sure that they are who they say they are, and they have the experience that they are portraying, because there's some bad actors in the industry. And so for me, it's basically security and cash flow, and really sticking to the fundamentals of what I'm looking for as far as what an asset is and what I want it to provide me.
Yeah, that's awesome. I've been investing for like the last 5 years, and I feel like everything, me being a limited partner is like an equity play, and the cash flow is just a little bit to keep you happy until, you sell, right? There's not a huge amount of cash flow, but I guess the more deals you have, the more cash flow you have. So, maybe it's more of a volume thing.
Right. And that depends too on because I've been an LP in deals as well. And I totally agree with that. But it is nice giving your money to somebody else and being hands off.
Yeah.
But you do pay a price. Like there's, that risk of, what are they doing with my money? Is it going to 2x? Is it going to 3x? Am I going to get my money back? Whereas if you're, maybe fixing and flipping or doing a buy and hold, you're doing more work up front, but you have more control, and the cash flow, in those single family flips or deals could be a lot better, and could set yourself up a little bit more securely for the future. So it just kind of depends on what you want your portfolio to look like, how much time you have to get to the investment as well. So a lot of factors going.
Yeah, no, that's true. I started as doing joint ventures just to get the education around me. I knew enough, and then I was busier with other ventures, and I was just like, I can kind of run this on autopilot. So, but no, that's awesome. Let me ask you more of your experience. What do you think, what was one of your early wins that made you realize that real estate investing actually works?
So I think one of my earliest wins, I started in Phoenix in 2010. So I was buying single families that were, pennies on the dollar right after the crash. But it wasn't until probably 4, 5, 6 years in, when I had heard about a 1031 exchange, knew about it, did some research, but I finally had the opportunity to actually pull the trigger on one. And I was like, oh, cool. This is what everybody's talking about with, delaying everything and delaying those, or deferring those taxes, I should say. And it's a great strategy. And then being inside of it, for me, it was a lot of fun, because I love managing a project. So there was the time crunch, there was finding the property, just talking to others who have completed a 1031, and hey, give me some tips and tricks, because I just love asking people like we're doing right now, just connecting with other investors, because that's how you learn to avoid those mistakes, right? If somebody else made a 1031 mistake, I don't want to make that mistake, but I want to learn about that mistake so I can avoid that landmine. So for me, the 1031 was the coolest thing to read about, and then it was even more fun to actually pull the trigger on and do.
That's awesome. Yeah, that's so great. Let's see. So I guess we kind of answered what your current investment strategy looks like today. How about what type of deals are you most focused on right now?
So right now, my wife and I were actually more focused on building our business. But as far as real estate investing goes, we do have a couple of business partners in Phoenix where we own residential assisted living facilities. Yeah, so it's it's obviously a niche in real estate where we own 3 single family houses. So they're not these big facilities. I know facility sounds like a big word, but yeah, 3 single family houses, and we rent them out to an operator, and they operate the business. We have nothing to do with healthcare and all that kind of stuff. So basically they are our tenant, And yeah, it's working really well. We're in the middle of a couple of refinances or starting to refinance right now. And so yeah, I think that's really just a great niche. Obviously in Arizona and Florida, where I live and where we live, a lot of elderly population, so assisted living facilities, it's very much in need. So that's a niche that I love, and I've been in for a little while, and I would love to kind of continue buying those here in Florida or maybe Arizona as well.
Okay. I've always been interested in that asset class. I've had some partners also that I think bought something, I think in the close to the Wesley Chapel area, maybe a little
Mhm.
bit further north, but yeah, I didn't have the money because it was deployed in other things. But are like, would you be looking for other investors to invest beside you, or is that just 100% owned between like just you and your wife?
So yeah, it's a good question. I'm not exactly 100% sure. I think I'd be open to taking on some partners if it was the right fit, for sure. I
Sure.
know I have the partners in Arizona. They have talked about doing some stuff here in Florida as well, so they could
Nice.
be on board. But yeah, we took on investors for those three in Arizona that I mentioned. So it wasn't any money out of our pocket. The investors are pretty happy. We're pretty happy. The prices, the properties have increased in value, which is always a good thing in real estate. The longer you wait, the more you should get rewarded. So yeah, I guess it kind of depends on what the deal is. But yeah, happy to. I'm always looking to connect with other investors, and if it makes sense to partner up or JV, then let's go.
Yeah, that sounds awesome. Yeah, I feel like assisted living is so lucrative because, depending on if it's like a type A or type B where you have a live-in person, you charge by the room. And I mean, to me, like the cash flow just makes sense. I think there's a small component where there is a business part of it too, but like I feel like the cash flow is very much, similar to maybe pad split, but you're not given any royalties or property management over to them. So it's like the best of both worlds. So that's cool.
Yeah, I think assisted living is a little bit more cleaner, especially as a real estate investor, because we just own the real estate and they're our long-term tenant. Whereas pad split, which I've looked into and I really like, it seems like there's a lot more moving parts and people are moving in and out.
Yeah.
So, but yeah, definitely another great niche. And I haven't dove into pad split personally, but I've done some research on it, and yeah, it seems pretty cool too.
Yeah. Yeah, it just makes sense because like you have like with the assisted living, you have everyone who's around the same age and has around the same interests. Whereas I think pad split, it's kind of a co-living. So you kind of get a mixed bag. You may not have you might have different ages and, and stuff like that. But
Right.
I know they have some type of, I remember when my daughter went to college, they have some type of survey or questionnaire where their interests are very common, and you can tell if people should be in the same household together or not, right? So
Right.
yeah, no, that's awesome. Cool. How have you typically been funding your deals? Is it more along the lines of you having capital when like for your cash flow, or is it like maybe you sold a property? Where do you typically, I guess, store and deploy the capital for deals?
Yeah, so I use some of my personal capital. I also have a whole life policy, which I think is more your area, right? So yeah, so we can definitely talk about that. Yeah, my wife and I, we've had them for I don't know, 7, 8, 9 years now. So I love that as well. And obviously, you can borrow money from it, you pay it back, you can borrow money from it again. So it's just a great tool to kind of pull from. HELOCs are the same way, as far as setting up that home equity line of credit and then pulling from it property and then paying that back slowly and then pulling it from it again. So I love lines of credit, and that's the way I look at whole life. With the obviously the end in mind. If somebody passes away, you get the chunk. But while we're alive, it's just a fun bank account to play with, and you can kind of pull from. And if you need a quick X amount of money, and that money's in there, you're not kind of scratching your head or stressing out. I can't do this deal. It's okay. I can do this deal. Now let's talk about the deal.
Yeah, no, that's great. That's awesome. Yeah, it's one of the best things, I think, even if you're not making a lot of income, but just being able to store that and having guaranteed income, I think is just, a pretty cool thing that not a lot of people know about. But yeah, I'm glad you have that. That's awesome.
Yeah. And that's one of the things, like, that I really love about real estate investing. You get into just different areas like whole life policy. I would have never thought I would have ran into that in the real estate world, but now that I know about it, yeah, it's totally real estate adjacent because of what we're talking about, the benefits that it provides. And again, just kind of don't going down that rabbit hole 7, 8 years ago and then pulling the trigger on it. It's fun being in there, right? Just like the 1031, it's fun being inside and actually doing the stuff that you're reading about and saying, oh, that's cool. And then when you're doing it, you're like, wow, this is beneficial and it's really cool to be inside it. So
yeah, that's so awesome. Yeah, I think the terminology now is like with the whole life, it's, what they call like infinite banking, but with the HELOC, I think they call it velocity banking. So it's different methods, but it still works, similar concept. So that's cool.
yeah, for sure.
Nice. Yeah. So I guess where do you see investors losing the most money without realizing it? Or even if you've learned a lesson, like I know myself, I have kind of stuck to like multifamily. I've never really done a flip, except early on it was like a single family house and it was pretty easy to flip. I'm kind of kicking myself because I feel like right now, like there's certain markets I think are good for flips, but like certain ones are not. So I ended up doing a HELOC on one of our properties to do a flip, and the GP or the operators, was so gung ho about the ARV, and right now we're keeping to having to like reduce the sales price. So
Right.
and this is like in a small town in Texas, and I'm just like, man, I should have just taken that money and do what we typically do and forget the flip. But have you had any lessons learned of that nature? Or?
Yeah, I definitely have in the years that I've been in investing. I think if I could go back, I would probably tell myself to really focus on one or two avenues of real estate. I think it can be a blessing and a curse to learn about all the different niches because they are fun, they're interesting. I've done some private money lending, which is cool, but I don't know enough to turn into a business necessarily. Airbnb, I had one Airbnb back in Arizona. I regretfully sold it too quickly because I think I was just impatient, and
Okay.
It was right when like COVID hit, so I had a little anxiety going on, and I was just so looking back, I really should have focused on one lane, maybe two lanes in real estate, and become more of an expert in those two lanes, and just keep going. I know it's boring and consistent, but who cares? I mean, we're not in it to to have the time of our lives. We're here to create, for me, financial freedom and freedom for my wife and everything like that. So that would be one piece of advice I would give my younger self, is just pick one or two, go all in, meet as many people as you can, network, and don't get distracted with all the noise out there, because there's a lot of noise, and once you get distracted, it's sometimes hard to get back onto that main road.
Man, it's so true and so hard to do. Like I've looked at I've like always wanted to get into like self-storage and parking garages. And like I know there's this group out of the Tampa area, maybe just south of you. I think it's called like Sunrise Capital, and they do maybe you're familiar, but they do parking garages, and then they do mobile homes, I think.
Yep.
So yeah, I mean that they've been doing it for a little bit, but I don't know. It's like one of those things like you want to stay in your lane, but like there's so many things that are enticing. Like sometimes it makes sense to diversify, and maybe sometimes it doesn't.
Yeah, and that's a personal decision. So, but yeah, you're right. I know Sunrise, and I know they do very well with parking garages, and that sounds so much like simple and easy. So it's like you said though, it's easy to get distracted, and it's fun to learn about everything. But what's the saying? You can do anything, but you can't do everything.
Yes.
Like, that I read that like a couple of years ago. I was like, oh, that makes sense for a lot of things, real estate investing and just everything in life. But I was like, yeah, you can do anything, but you can't do it all. So you got to pick and choose.
Yeah, totally. Yeah. So yeah, I mean, I've been doing like commercial real estate for like going on 4 years now, and for the most part, that is working. Like I'm probably not going to do a flip in any kind of market for a while, unless it's like I don't know. I may not, but like I may branch out to another asset class, whether it's self-storage or parking garages. But yeah, or like you mentioned, assisted living and that kind of thing. I just feel like some of these models are just so lucrative. It's just like hard to pass up on. So
That's the enticing part. Yeah.
Yeah. No, that's awesome. So I guess a couple more questions. What do you think you're like for the future? Like what your goals are over the next 2 to 3 years in terms of like growth or deal volume?
So growth, like I said, me and my wife were really focusing on building the bookkeeping business to basically funnel that money into real estate. So that's our main goal. As far as volume, I would love to, whether it's assisted living or even investing in as an LP in a fund or something like that, like very passive, like we talked about. I would love to invest, maybe twice a year into those kind of funds. That would be ideal for me, just slow and steady, because that's what kind of got me here. So yeah, I'm just really looking forward to building the business and then using that cash flow and putting in the real estate, funding the retirement accounts, buying some real estate in the retirement accounts, using the whole life policy, kind of just playing the whole game of, where's the money going, where's it coming from, and how fast can you build it?
If you end up like selling a property, what do you think you would do that with that money? Would you open a new policy for 1031?
Yeah, that's a good question, actually. I never thought about opening up another policy, which I'm sure maybe some of your clients and customers don't think about that. They think it's one policy and that's the one road they go down. Am I right?
Yeah. Because, just kind of the godfather of IBC, Nelson Nash, he basically said the goal is to have a system of policies for not just you, but for, your next generation and other generations to come. But he also said that, and it's been kind of proven, where the dividends are so much higher, where your cash value is better with a single premium of a lump sum as opposed to just a monthly premium.
Right.
So yeah.
Yeah.
But you're right. People are like, okay, got my policy, I'm set. But yeah.
So that's interesting. You put that in my mind now. If I do sell a property, that opening up another policy is one of the options I should explore instead of just maybe 1031ing or taking that money and putting it into something else. Yeah, that's something to think about.
Yeah, I'm just thinking, like, even if it's like less than 6 figures, it's like that lump sum is going to, on average get about, 5 to 8%, whereas, no other vehicle would have that guaranteed growth. So, and then even still and I don't know what carrier you've used, but you have the whole, you can still borrow it and it grow there. I know there's some where, when you borrow the money, it only grows on what's left in there. But there's a lot of carriers that, you can borrow all day long, and whatever amount was originally in there, it's growing off that amount, not the amount left in there. So yeah.
Right. Yeah, two different distinctions for sure.
Yeah. But no, that's awesome. Yeah, one of my clients actually opened my eyes because she wasn't thinking as big as I was, and she's like, "No, if I'm going to sell a property, I'm just going to throw it in another policy." I'm like, "Yeah, I never thought of that. I think that's a great idea." Now, so
yeah, because then you can take that money from the policy and then borrow against it, buy that property you're going to buy anyway, and then still have that other vehicle working in the background, right?
Yeah, for sure. Yeah, definitely. And then, okay, so last question, just what do you think your biggest challenge you're facing right now when it comes to, I guess, scaling or capital even?
Yeah, I think I'd say at this point, capital is probably, I have more ideas and deals that I want to do than capital that I have at the moment, which is, why we talked about earlier about maybe taking on partners or JV, because if people have capital, but they don't have the deals, and I can find the deals and don't necessarily have the capital or want to use my own capital, that's a good partnership, obviously, when you complement each other. But yeah, I'd say me personally, I'd say it's probably more lack of having the amount of cash that I want to deploy right now. So yeah, and it's not like a big problem, because there's people out there with money. It's just finding them, vetting them, making sure that they're legit for to be in a partnership with, because if you've ever been in a partnership and it's great, then it's great. But if you've ever been in one that's not so great, it can be a nightmare and a headache. So enter partnerships with some discretion. There is my advice.
Yeah, definitely. Excellent. Cool. Well, yeah, this has been really great. I appreciate all your insights. You definitely have a wealth of experience and knowledge. So yeah, I appreciate you sharing that. Yeah, would love to. I don't know if I'm at the point to where I need a bookkeeper, but I actually still have a W-2. I've been a data engineer for 25 years. So
cool.
As quick as I can get rid of that and do this financial services full time or close to full time, then I can have more freedom to kind of work on cool projects in different verticals. So yeah.
Right. Yeah, that's always fun with managing the W-2 and the investing and the whole life and everything. So yeah.
Yeah, but cool. Well, yeah, I'd be interested if you come across any deals, if you need any investors, if it makes sense. Yeah, definitely
Okay.
be open.
Yeah, great. Yeah, I'll definitely keep you in mind. And are you looking for more like any kind of specific deal that you want to invest in, or you just analyze the deal, whether it's like a single family or assisted living, and if it looks good?
Yeah, I mean, we just because like between my wife or my girlfriend and I, we have about 3 single family houses. One's in Texas, 2 are in Florida, and then the rest are like commercial deals. Like some of them are under 50 units, and a couple of them are even over 100 units. Actually, so because you're from Phoenix, you may or may not know the I guess real estate investor Rise 48.
Yeah, I'm actually invested with them in one deal in Carolina, I believe.
Okay, nice. Yeah. So yeah, I actually ended up investing with them in I think it's in Mesa. That was our last one, but I'm pretty much open to whatever, like even if it's a single family house, if it's something that can add to the monthly cash flow, and there's a buy and hold and a pretty decent equity component there. Yeah, I'm for it. I think the only thing that I try to stay away from is like tenant friendly markets. I
Right.
stay away from the Californias, the Washington states, and the New Yorks.
Yeah,
So,
yeah, I don't blame you, and I'm the same way.
okay, cool. But all right, well, that sounds good. If you may know of any, because I'm always looking for more people for the podcast, and maybe they're not utilizing the whole life, would love to kind of open their mind a bit and see if that might be for them, or love to get their experience as well, just for the podcast too. So yeah.
Right. Yeah, definitely. I can put it on my social media and stuff, and see what other investors are out there. And like you said, for either for the podcast or for whole life or both. Yeah, happy to help you, man. And yeah, so when is the podcast actually going to be like launched or live?
I'm thinking probably around like September timeframe. Yeah, because like there's a lot of like for like personal things. Like we're actually in the end of June, we're actually moving to Nashville for like a year because my girlfriend's daughter is finishing up her fellowship at Vanderbilt.
Nice.
So we're kind of helping with her daughter who's 9 months right now. So we're playing grandparents and just helping her out. But yeah, we should be back in a year. But yeah, just thinking after 100 interviews, like I already ordered this background is virtual, but I ordered a real sign, and I got some published articles, and I wrote my own book. So I'm hoping I can have a little bit of trust factor there, and I can get some other guests on there, and I can, maybe do full episodes a couple times a month or that kind of thing.
It's really cool. So 2 things I was going to mention is, one, have you looked at I think it's Podmatch?
Yeah.
I think it's like relative. It was cheaper. Like I looked at it like 5 years ago. It was like $9 a month. I think it's like $30 a month now. But it connects hosts and guests, so you can go there as a host and say, this is my podcast. I'm looking for X, Y, and Z kind of guest, and then guests go on there. And I think they pay too, and say, I'm a real estate investor. I'm looking for hosts. I think it'd be worth your time, because I'm going to start maybe doing some more podcasts and go on there as a guest just to find hosts like yourself that kind of fit the niche that I'm looking for.
Yeah. I know you're
pretty
I think
popular.
is it Podmatch or Pod Pitch?
Actually, I think Podmatch is the matching service. Pod Pitch it's similar, but there's some different aspect to Pod Pitch.
Okay. All right. So Podmatch, yeah, $30 a month. That's not bad.
Yeah. And I was going to ask you, because I wrote some books too. What books did you write?
So I originally I was kind of like on my financial independent journey, and I thought I wanted to be a money coach, just helping people with like just basic stuff. And then I was like, I have a background in real estate, and I thought there's so many money coaches out there. If I were to niche down into like infinite banking and help real estate investors, I think that's more of a nice niche. So I actually just named it after my personal brand. It's just called the Abundant Wallet. It's an easy read. It's just like, so I went to FinCon a couple years ago, and I found this publisher, and he actually published my book. It was such an easy process. I joke all the time, like the hardest thing about writing the book was picking the cover. So like it was really super easy. He made it easy. So he just pulled all the information out of me. But yeah, so that was released last August. How about yourself?
That's awesome, man. Yeah, so I wrote a couple of years ago, I joined it was an Amazon like self-publishing course, I guess, or like mastermind or whatever. So I probably paid a lot more than you did for your book, but I published a couple of books, and mine's actually on, it's called Team Money Mindset. Actually,
Nice.
this is that's the book.
Love it. Okay.
So yeah, it was basically, and I have another one coming out this summer. It's called Parent Money Mindset. So in kind of a series, but I realized that, teens these days, and I don't have any kids, but teens, they don't really learn anything about finances or money in school. They basically just learn, social studies and history and all that kind of stuff. So when they get into high school and college and in the real world, they really don't know how to like what a credit card is and how important a credit score is in the world. Because I grew up with that. My parents were very, my dad was an international banker and very much in the stock market. So I grew up with him showing me and him teaching me. But I kind of wrote the book because I was dating this girl. And when I met her, I was like, oh, like in my mind, I'm like, oh, you don't really have a lot of financial education, which is fine. Then I met her parents, and I was like, now I see why you don't have that, because they never taught her. So I was like, yeah, let me just write a book about it. And it's doing really well, and I'm going to turn it into like a course and everything. So I'm really trying to like move forward with, creating like an educational platform and helping parents and teens having those conversations that, a lot of parents and teens don't really have about money and finances and that kind of thing. So anyway, publishing and writing books, I think it's fun and it's cool. And it's definitely a good anchor for, giving yourself like that social proof of like, oh, wow, like Larry wrote a book. He must be really dedicated to his craft and smart, right? And so it's a good feather in your cap.
Yeah, for sure. Yeah. It's like the business card that, never runs out. So,
yep.
Yeah. No, that's awesome. That's awesome. I'll have to pick your brain another time. I've been mulling over doing a course on one of two things. I thought about doing another book as far as like the limited partner goes. And I feel like there's so many real estate books out there for like maybe operator. And I think there's a couple of them with like respect to limited partner. I think like Rob Beardsley has written something, but I don't think it's an easy read. But I wanted to turn that into a course also. But I wanted to kind of say like limited partner, unlimited returns, or something clever.
Oh, nice. Good title,
Yeah. But turn that into a course. Or I wanted to, because I feel like infinite banking has gotten beat down by like the Dave Ramseys of the world. I wanted to do a course on it, or even a mini course of how people can use it, some case studies, and just all the things about it, even the gotchas, like you may not know. So and it's not just to get more clients, but it's just to open people's mind, because as soon as you say anything with life insurance, they're like, oh no, I don't need that. Right. So it's just like, did you know you can use it for this and this? So
I think that would be valuable. Yeah.
Yeah. But cool. Well, yeah, it's cool. It seems like we're on the same page with a lot of things, so that's awesome.
Yeah, no kidding.
Yeah, cool. Well, I come to Tampa every now and then, so I'll let you know next time I'm coming. Maybe we can grab some coffee or something.
Yeah, please do. I'll shoot you. I know we're connected on LinkedIn, so maybe I'll just shoot you a message there. But I'll shoot you my contact info, and anytime you're in Tampa, I mean, I'm like 45 minutes south of there, so
cool.
Grab lunch or coffee. That'd be great.
Yeah. I used to live in like Riverview and Apollo Beach, so it's a lot closer than actually Tampa proper. So
right. Yeah.
But cool. Well, that sounds good. Well, again, thanks for your time. Let me know if I can be of any help or value of any kind. But looking forward to talking more.
Yeah, no, me too, Larry. Thanks for having me on here. And I'll definitely put it on social media, try to get you some interviewees and everything, and keep you in mind for the whole life. And hit me up when you're in Tampa, man. It'd be fun to grab a coffee.
Yeah, that sounds great. All right, Greg.
Awesome.
Well, have a good one, and we'll talk soon.
All right, sounds good. Thanks again, Larry.
All right, take care.
All right, you too, man.